Welcome to the world of finance, where every penny counts and every decision has a ripple effect on your financial well-being. In this video, we delve into the treacherous territory of financial pitfalls, those sneaky traps that can ensnare even the savviest of savers. We'll be shining a spotlight on 10 of the most common money traps and arming you with the tools to dodge and weave your way past them. Money Trap 1. Overdraft fees. Picture this. You're at the checkout, ready to pay for your groceries when suddenly your card is declined. Embarrassed and flustered, you check your bank balance only to find that a seemingly small purchase has pushed you into the red. This, my friend, is the first pitfall on our list: overdraft fees. Overdraft fees are the bane of many a bank account. They're those sneaky little charges that creep up on you when you least expect it, leaving you with a depleted balance and a hefty fee to pay. But fear not, for with a little forethought and planning, you can avoid these fees and keep your hard-earned cash where it belongs, in your pocket. The key to avoiding overdraft fees is to stay on top of your spending and to have a clear understanding of your account balance. This means regularly checking your balance, setting up account alerts and having a backup plan in place for those unexpected expenses. Another useful strategy is to opt for an overdraft protection plan, which can help you avoid those pesky fees. Just be sure to read the fine print and understand the terms and conditions of your plan before signing up. In short, don't let overdraft fees catch you off guard. By staying informed and proactive, you can avoid this money trap and keep your finances on track. Money Trap 2. Late payment fees. The second pitfall on our list is a familiar one: late payment fees. These fees can sneak up on you when you least expect it, leaving you with a lighter wallet and a blemished credit score. But fear not, for with a little organization and planning, you can avoid falling into this trap. Late payment fees are the penalty charges that come with missing a payment deadline. Whether it's a credit card bill, a loan repayment, or a utility bill, failing to pay on time can result in a fee that can quickly add up. The best way to avoid late payment fees is to stay organized and on top of your payments. This means setting up automatic payments, using a budgeting app, or simply making a note in your calendar to pay your bills on time. It's also important to understand the payment terms and deadlines for each of your bills. Some companies may offer a grace period, while others may charge a fee for payments made after a certain date. By understanding the payment terms for each bill, you can avoid any unwanted fees and keep your finances in check. Money Trap 3. High interest credit card debt. The third pitfall on our list is a slippery slope that many of us have fallen into at one time or another: high interest credit card debt. This type of debt can quickly spiral out of control, leaving you with a mountain of payments and a depleted bank account. But fear not, for with a little discipline and smart planning, you can avoid this trap and reclaim control of your finances. High interest credit card debt is a result of carrying a balance on your credit card and paying only the minimum amount each month. This means that the interest charges on your balance can quickly add up, leaving you with a debt that's hard to pay off. The key to avoiding high-interest credit card debt is to pay off your balance in full each month. This means only using your credit card for purchases that you can afford to pay off in full. If you can't pay off your balance in full each month, consider transferring your debt to a card with a lower interest rate or finding alternative ways to pay off your debt. Another helpful strategy is to limit the number of credit cards you have and to be mindful of your spending. This means avoiding impulse purchases and sticking to a budget. By keeping your spending in check, you can avoid accumulating debt and keep your finances on track. Money Trap 4. Unnecessary subscriptions and memberships. The fourth pitfall on our list is one that can quietly drain your finances without you even realizing it: unnecessary subscriptions and memberships. These recurring expenses can add up quickly, leaving you with a lighter wallet and a cluttered inbox. But fear not, for with a little attention and effort, you can avoid this trap and take control of your finances. Unnecessary subscriptions and memberships refer to services that you may have signed up for but no longer use or need. This could be a gym membership, a streaming service, or a monthly box subscription. While these services may have seemed like a good idea at the time, they can quickly become a drain on your finances if you're not careful. The best way to avoid this trap is to regularly review your subscriptions and memberships and cancel any that you no longer use or need. This means taking the time to go through your bank statements and cancel any recurring charges that you don't need. Another helpful strategy is to be mindful of the subscriptions and memberships you sign up for in the first place. Before signing up for a new service, consider whether you really need it and whether it's worth the cost. By being mindful of your subscriptions and memberships, you can avoid accumulating unnecessary expenses and keep your finances in check. Money Trap 5. Impulsive purchases. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. The fifth pitfall on our list is one that can strike at any moment and leave a lasting impact on your finances. Impulsive purchases. These unplanned and often unnecessary expenditures can quickly add up, leaving you with buyer's remorse and a depleted bank account. But fear not, for with a little self-control and smart planning, you can avoid this trap and take charge of your finances. Impulsive purchases are those that are made without careful consideration or planning. This could be a spontaneous shopping spree, a spur of the moment vacation, or an expensive gadget that catches your eye. While these purchases may bring temporary joy, they can quickly leave you with a sense of regret and a lighter wallet. The best way to avoid impulsive purchases is to practice self-control and stick to a budget. This means avoiding the temptation to buy things on a whim and instead taking the time to consider whether a purchase is necessary and whether it fits into your budget. Another helpful strategy is to delay your purchases. Before making a big purchase, wait 24 hours or more to think it over. This can help you avoid impulsive purchases and ensure that you're making smart financial decisions. Money Trap 6. Hidden fees. The sixth pitfall on our list is one that can sneak up on you, leaving you with a surprise on your bill. Hidden fees. These sneaky charges can add up quickly, leaving you with a feeling of frustration and a lighter wallet. But fear not, for with a little research and attention, you can avoid this trap and take control of your finances. Hidden fees are charges that are not clearly disclosed or easily noticeable, such as ATM fees, account maintenance fees, or processing fees. These fees can quickly add up, leaving you with a bill that's higher than you expected. The best way to avoid hidden fees is to do your research and read the fine print. This means taking the time to understand the fees associated with a product or service before you sign up for it. For example, when opening a new bank account, make sure to ask about any account maintenance fees or ATM fees. Another helpful strategy is to look for alternatives that don't have hidden fees. For example, if you frequently use ATMs, look for a bank that doesn't charge fees for using other banks' ATM. By doing your research and looking for alternatives, you can avoid hidden fees and keep your finances in check. Money Trap 7. Payday loans. The seventh pitfall on our list is one that promises quick cash but can leave you in a vicious cycle of debt. Payday loans. These high-interest loans can quickly spiral out of control, leaving you with mounting debt and a feeling of hopelessness. But fear not, for with a little research and planning, you can avoid this trap and take control of your finances. Payday loans are short-term loans that are typically due on your next payday. While they may seem like a quick and easy solution to a cash crunch, they come with high interest rates and fees that can quickly add up. This can leave you in a cycle of debt where you're constantly taking out new loans to pay off the old ones. The best way to avoid payday loans is to plan ahead and build an emergency fund. This means setting aside money each month for unexpected expenses and having a cushion to fall back on when you need it. By having an emergency fund, you can avoid the temptation to take out a payday loan and instead take control of your finances. Another helpful strategy is to look for alternative solutions. For example, if you need money quickly, consider asking family or friends for a loan, or look into other options such as a personal loan or a credit card with a low interest rate. By exploring alternative solutions, you can avoid payday loans and keep your finances in check. Money Trap 8. High-cost insurance policies. The eighth financial pitfall to watch out for is the high-cost insurance trap. This trap can be set by seemingly innocent insurance policies that promise peace of mind but end up draining your hard-earned cash. But with a little due diligence and research, you can avoid this trap and keep your finances secure. High-cost insurance policies are often sold with the promise of providing comprehensive coverage, but in reality, they can be filled with hidden fees and fine print that you may not have noticed. For example, you may be paying for coverage that you don't need or may not even use. To avoid this trap, It's important to take the time to review your insurance policies and understand what you're paying for. This means reading the fine print, comparing policies from different providers, and asking questions if you're unsure about anything. By doing your due diligence, you can ensure that you're getting the coverage you need at a fair price. Another helpful strategy is to look for discounts. For example, many insurance providers offer discounts for bundling multiple policies, having a good driving record, or being a homeowner. By taking advantage of these discounts, you can lower your insurance costs and keep your finances in check. Money Trap 9. Investment Scams. The ninth money trap to watch out for is the investment scam. This trap is set by unscrupulous individuals who promise high returns on investments with little to no risk. But these promises are often too good to be true, and the end result is that you lose your hard-earned money. Investment scams can take many forms, from Ponzi schemes to fake cryptocurrencies. They often target individuals who are looking to grow their wealth quickly and without much effort. But these scams rely on the greed and trust of their victims, and once you've invested your money, it can be difficult to get it back. To avoid this trap, it's important to be vigilant and do your research. Be wary of investment opportunities that promise high returns with little risk, and don't invest in anything that you don't fully understand. Additionally, it's a good idea to consult with a financial advisor or investment professional to help you make informed decisions. Another helpful strategy is to check the credentials of the person or company offering the investment opportunity. This can be done by looking for information online, checking with regulatory bodies, or asking for references. By doing your due diligence, you can avoid investment scams and keep your finances secure. Money Trap 10. Poor budgeting and money management. The final money trap on our list is poor budgeting and money management. This trap may seem like a no-brainer, but it's one that many people fall into. Without proper planning and organization, it's easy to overspend, accumulate debt, and miss out on opportunities to grow your wealth. Poor budgeting and money management can take many forms, from failing to track your expenses to not having a plan for paying off debt. It can also involve living beyond your means, making impulsive purchases, and not saving for the future. To avoid this trap, it's essential to establish a budget and stick to it. This means tracking your income and expenses, setting financial goals, and making a plan for paying off debt. Additionally, it's important to make saving a priority, whether it's for an emergency fund, retirement, or a big purchase. Another helpful strategy is to educate yourself about personal finance. This can involve reading books, taking courses, or seeking advice from financial professionals. By gaining a better understanding of how to manage your money, you can make informed decisions and avoid the pitfalls of poor budgeting and money management. Remember, financial success is not about getting rich quickly. It's about making smart choices, managing your money effectively, and planning for the future. By following the tips we've discussed in this video, you'll be well equipped to avoid the financial pitfalls and build a solid financial foundation. So, take a deep breath, embrace the journey, and start taking control of your finances today. With determination and discipline, you can achieve financial stability and success for a lifetime.